The equal weight S&P 500 and high yield bonds are yet to hit the record highs. This is a bearish divergence and it could resolve up or down for stocks, and I'll explain what I mean. The major indices S&P 500, Dow Jones and NASDAQ all hit records. Small caps are still lagging, and we will look at gold as it is struggling while dollar approaches new uptrend. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 26, 2024. As always, please remember to hit the like button, share this video, make a comment, or ask any questions in the comment section below. These actions are what keeps this channel going. Once again, big thank you for all the comments and shares and likes that I've been receiving lately. Again, thank you very much. If you are a subscriber, stay tuned. We have quite a bit of market moving events and various ETFs, high yield various ETFs and stocks that we're going to cover in the members only section. Market breadth and crude oil notably are going to be covered in the members only section. Some very interesting setups as well as interesting patterns are, for example, for Tesla. As well as we're going to look at C4 Therapeutics, so I have a position in that, and some of the other ETFs such as Treasury bonds. I just opened a new position. If you are not yet a subscriber, consider signing up by going to MasterChartsTrading.com, sign up for one of the products. So we're going to be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red and yellow lines, which I use for trading of stocks on pretty much any time frame, and you can have them on your chart, on your TradingView.com chart. This is the TradingView.com interface, and once you sign up on my site, I will open the door for you and you will have them on your chart. Looking at S&P 500, we have made yet another all-time high, so record highs. We are pushing to the place we've never been to. This is an all-time high. We have exceeded previous highs from January 2022. Seems like a millennium ago with all of the events. If you remember the Russian invasion of Ukraine, etc., and now we're back into uncharted territory. So overall, obviously, record highs is a good sign. I have a position personally in S&P 500. I'm going to show it to you, SPY. So I bought SPY back in October. I just sold about half of my position last week. I'm still holding the remaining half. Are we done? That's the question, everybody is asking. Several slides I'm going to show in a few seconds. I'm going to say that there is quite a good chance that we're going to be pulling back relatively soon. But for now, let's enjoy it. We're looking at S&P 500 at all-time highs. If you open the position, congratulations. The same goes for Dow Jones. Dow Jones, notice this up arrow on November 3rd of last year, 2023, and pretty much non-stop move higher. This is an actual alert to my subscribers. So Dow Jones, S&P 500, as well as NASDAQ is at all-time highs, and it continues, and we continue to make more all-time highs. So for now, on the surface, everything looks wonderful. There are some small issues that I have been able to identify, and we're currently looking at what's called an equal weight S&P 500, so ticker symbol RSP. So equal weight means that each of the 500 stocks within the S&P 500 are treated identical. So let's say we have Google, and let's say we have some other stock within the S&P 500, like, I don't know, Newmont Mining, for example. And obviously, Google is much bigger by market capitalization versus, let's say, Newmont Mining. But for this ETF, Exchange Traded Fund, RSP, ticker symbol RSP, all of the stocks are treated equally. So we have 500 stocks, and their representation within this ETF are identical. So we can see on this chart that there is what's called a bearish divergence. We have made a new high, so let's just make sure we actually made an all-time high, or is it a 52-week high? So we actually haven't even made an all-time high for the equal weight ETF. I apologize, I have a bit of a cold, but we'll have to deal with it. So notice that the equal weight RSP made a record high last in 2022, in January 2022, so 2 years ago. And so far we have not yet made a new all-time high. We did make a 52-week high, so which is pretty good. Now notice that this is what's called a so we have a high that was made on the 29th of December, 28th of December here, and so far we haven't made a new one. Notice that S&P 500 itself made a high on the 28th of December, where I'm hovering, pulled back slightly, and then made yet more record highs. So what does that tell you? This tells you that an average stock within the S&P 500 has not kept up with the big large cap stocks. And if you read the news, if you read Wall Street Journal, we have what's called Magnificent Seven, which is, I think Google, Tesla, and some other ones. I don't remember exactly, but I mean, it's just they're mega cap stocks. Apple probably. They're just mega cap stocks that everybody wants to own. And yes, within the S&P 500, they represent a very large part. So top holdings of we can actually we can look at SPY holdings. So SPY holdings, you can see that we have Microsoft, Apple, Nvidia, Amazon, Alphabet, Meta Platform. So Alphabet actually is twice. And you can see it's like 7, so it's 14. So we're looking like 20% or so of the top companies are made up of 5 to 7 largest cap companies. So what does that mean? That means that we have S&P 500 has been propelled to new records to a large extent by top heavy or biggest capitalization stocks, whereas equal weight, you can see, is underperforming. So this is called a bearish divergence, where we have not yet made a new high for average stocks, but large cap stocks are pushing higher. So case number one for equal weight S&P 500. Case number 2, high yield bonds, junk debt, JNK, also have not yet made a new all-time high, and has not yet, and only recently, well, let me see, in December of last year, junk debt, high yield bonds made a 52-week high, and since then it's been pretty much trading sideways to down. Why do I care about high yield bonds? So we're looking right now on high yield bonds on a weekly time frame, and notice this indicator down below here that looks that yellow indicator that looks kind of like a mountain. This just shows a correlation between S&P 500 and high yield bonds. So there's a high degree of correlation between S&P 500 and high yield bonds, and when I see things like this, I see that high yield bonds have not yet made a new all-time high, but it has tried to make an all-time high, and it's pushing towards there, but has not yet done so. This is again a bearish divergence. So right now we have 2 of those within just stock universe and high yield bonds universe. If you're a subscriber, I will also talk about market breadth indicators, and they're showing the same thing. We're showing that we're being propelled to new highs by a small minority of stocks. Two ways for this to resolve. One way is for high yield bonds and for average stocks to move higher and make new records. Is it possible? Absolutely. We've been doing it. We're just kind of falling behind a little bit. Another option, a possibility, is for S&P 500 and various and the major indices like Dow Jones and NASDAQ to pull back, so that they are in a lockstep together with high yield bonds and an average stock for within the S&P 500. And it sure feels like we're stalling. So we have 3 days. I mean, we are making new highs, but so far we're kind of failing to move any higher. Now, where would they pull back? If it was to materialize, where would it pull back, unfold, and where would it take us? So there is this gap here, right there. That's the gap is between the 13th of November and 14th of November. So theoretically, you can say that this is a breakaway gap, and it continued higher. It's not really, doesn't really matter, but I mean, it's just a gap. We need to fill that gap eventually. I mean, there's a couple more gaps, but I'm really interested in this particular gap because it's so obvious, and it's also additionally, it's also a around the same area where my blue line indicator line, it comes in as well. So I can also turn on the 200-day exponential moving average. It's right now in yellow here. You can see that my indicators are not based on the moving averages, but notice that the same exponential moving average, 200-day exponential moving average, is right around this blue line. So we need to be, we need to consider this as a very strong possibility that a pullback will materialize. The question is when. So timing this type of pullbacks is pretty difficult. And as of right now, there is really no sign that I can see. I mean, price action wise, it's a very small candles. Today, yeah, there is some potential resistance up here, but is it enough to open a short? Is it enough to buy puts? I don't know. What do you guys think? Do you think we should be buying puts now? Do you think we should be selling S&P 500 short for at least a move down, towards like about, how many percent is that? So that's about 9% move back. It's a very normal type of pullback, but will it materialize now or will it materialize a little bit later? So I'm kind of interested to know what you guys think about this. Do you think we will get a pullback or not? Right now, I'm kind of getting to the point where we have, like I said, we have these divergences in the equal weight, and we have divergence in the high yield bonds. Will it actually play out immediately? That's a really good question. Let's switch gears. We're looking right now at dollar currency index, DXY. So dollar currency index has broken down into a new downtrend back here in the mid-December of last year, and so far really failed to follow through to the downside. So notice that this move down was quite muted, but very interestingly also notice that right there on 27th and 28th of December, this bottomed out exactly at my yellow line. Okay, so these indicators, weirdly, they do mean something. And I'm not just making them up, you can turn them off. Okay, so these are mathematically calculated. So notice that we have not been able to break below this yellow line, and we moved higher. And so far, we've been kind of trading sideways since 16th of January, so about 2 weeks or so. we've been pretty much trading sideways. We can look at the weekly chart and see what that looks like. But overall, there's really not much difference as far as daily and weekly. We're pretty much trading sideways. So dollar is moving, normally moves inverse to gold. If dollar strengthens, gold weakens. If dollar weakens, gold strengthens. So right now we have the situation where, technically speaking, dollar is in a downtrend, but we have bounced back. And if we roll over and again close below this red support resistance line, which is currently at 102, and this is a DXY, dollar currency index, if we roll over and then close below the red line, then it will be something like what we just had back in mid-December of last year. That would be our trigger to sell it. Sell the dollar, for example, buy euro, or sell dollar, buy Canadian dollar, things of that nature, if you trade Forex. But if you don't trade Forex, just think in terms of, is dollar appreciating or depreciating? And if dollar moves a little bit higher, about a percentage point higher, we will get to this blue line, and once again it will be considered a bull market, uptrend. So I will be thinking, okay, yes, dollar is on an uptrend. We need to think about not buying gold and potentially selling it short. So let's look at gold. What's it doing? So up until very recently, we had no problem. Notice this, up arrows at the blue line. We pretty much nailed most of the moves, and you were able to make some money. So lately, I'm looking at this chart, and I'm just not seeing a very strong bullish picture. Number one is this huge candle on the 4th of December with rejection, shadow at the top, and big red candlestick indicating bears or people who think that the stock will continue lower were in control. Since then, obviously, we weren't able to make it above to new records, and over the past few days, we've been just trading above this blue support resistance line. We're struggling. We're struggling to go up or down. I think, once again, it all depends on the dollar. Dollar is also struggling, but dollar is so close to the new uptrend. And if that happens, I think gold will come under severe pressure. That's why I have this downward facing arrow, downward potential direction here. Will it actually happen? Well, that's a very good question. Right now, we're sort of in this nowhere land. We're not really moving up, we're not really moving down, we're just struggling. We're waiting for some sort of a signal. We're waiting for some sort of a clarity. So what are the potential triggers for dollar to either move up or down? We could see action by Federal Reserve. We could see action by various central banks around the world. We could also see some sort of a world-shaking event that could, either help dollar strengthen or vice versa, help dollar weaken. And by then, we will know which way gold will be going. So right now, no idea. It could go either way right now. So I'm just not trading gold right now. I'm waiting to see where it's gonna go, basically, at this point. And again, I'm very interested to hear what you guys think. Will dollar rally? Will that sink gold as a result? Finally, I wanted to highlight Bitcoin, and I just closed my position. So let me just show you what how we were trading Bitcoin. So let's kind of rewind a little bit. Notice this, November 2022. Okay, remember this is more than a year ago. Excuse me, I still have a cold. So we made a new low back in November 2022, and then started moving higher. Notice we moved above the red line in January of 2023, so a year ago. And then finally we broke out right there above the blue line on February 15, 2023. So at this point, I'm basically saying, yes, we are now in an uptrend for Bitcoin. We need to look for buying opportunities. We did just that. So we can see up arrows, and you can see that they were mostly played out in our favor, up arrows. So we wait for a security to pull back towards the blue line, and we buy it around there. I personally bought Bitcoin on 23rd of August of last year, and then again I doubled my position on October 4th, 2023 of last year. Almost immediately we have a very strong move higher. I sold a quarter of my position. I bought it around 26,500 or so on average. I sold a quarter at 43,000, almost 44,000. Sold another quarter at around 42,000, and finally closed my position a couple of days ago at 39,000. Why did I close my position? My trailing stop was at the blue line. So there it is on the 22nd of January. My stop was triggered and I got out. Now, question is, do I want to get back in? And today's action, and I mean already technically yesterday's action, because this is traded 24/7, it looks pretty good, but I think we're most likely going to trade sideways for a while, to possibly down, before a potential new leg up unfolds. There is also a possibility that we'll roll over into a new bear market. No way to know. All right, but at this point, I'm just waiting to see what happens, and I'm sitting on a and I already have closed the position, so I really have. I'm sitting on a very nice gain. Again, what do you guys think? Which way is Bitcoin going to go? Make a comment, and I'd love to hear from you. If you're ready, head over to MasterChartsTrading.com, click on sign up for one of the products. So I have updated this finally, and now we have both yearly plans and monthly plans. You can subscribe to the yearly plans by credit card, Apple Pay, or GPay, but to monthly you can also use PayPal. I haven't gotten around to making this change. So trading indicators, $24.95 per month, is basically these lines. You can get them on your chart on TradingView.com. Once you sign up on TradingView.com, it's free. TradingView.com is free. But once you sign up there, come over to my site, sign up, and I'll open the door for you on your account on TradingView. It's pretty easy. If you're not sure, just send me a message. You can send a message through YouTube. You can also send a message through my site. Contact me right there, and I'll explain everything. Newsletters. So newsletters are sent out daily, and for example, this is our current trading list, and so several alerts from this list were sent. So many various ETFs. Also interesting airlines is coming up for potential breakup, and Cannabis is also coming up for a potential breakout. We also look at large cap stocks such as Tesla, Verizon, Walmart, as well as various smaller cap and speculative securities like C4 Therapeutics and CarGurus, for example. So newsletters is that I send out daily alerts as well as weekly members only videos that will be sent out separately to the subscribers. I think the best deal, of course, is to get both indicators and newsletters, and at now yearly price at $49.95 per month or monthly at $59.95 per month. It's a pretty good deal, I think. So if you have any questions, let me know. Otherwise, thank you for watching and have another great trading week. Again, don't forget to make a comment, like this video, and share this video. Thank you again for watching. Bye-bye.